let's get right down to it. The ABCs and 1, 2, 3s of a proper insurance contract administrative guideline to a successful sale. I'm doing this webinar, again, mostly because there are a lot of questions that can go on while you're prospecting and that a lot of advisors and clients don't know about. So we want to be able to arm you with a lot of information that will help you during your discovery while you're prospecting, and so that you have key concepts in your arsenal while you're going through questions or when you're working with a client. The purpose of this presentation is just to understand some basics. Really, my goal after today's webinar is to protect your client, protect yourself, protect your credibility, and provide a great client experience. And you can only do that if you know some of the ins and outs that go on during that process. So the goal here is to be able to explain to a client what information is required to get a reliable quote from an insurance carrier and why. Understand common pitfalls that can stall the implementation of a new plan and or cause payment issues or pain issues as well for clients and plan members. So we're going to go through some of these things. And again, feel free to reach out in the chat if you need to. So when I say we want to protect your client, there are a couple of things that come into play when you're setting up a benefit program. Number one, you need to make sure that you set up a proper waiting period. Most contracts default to the 3 months, to a 3-month waiting period, but there are some industries that require or that want to have a longer waiting period. So typically, a waiting period of 3 months is set up to protect the employer and match the probationary period set out in many employment contracts. So you want to make sure that that your employer or your prospect or your client is putting in a waiting period and one that's sufficient or coincides with their hiring practices, and that can be important. I know that there are some industries that set longer periods. I've worked with clients in the HVAC industry, ones that have a large turnover, who set a 9-month, 12-month, or even a year waiting period before benefits kick in. And that is to protect them from claims that are being put in right at the beginning, and then maybe they don't stay around, or the employee doesn't stay around, and then those claims are sitting there. So this is one way to protect your client, is understanding the waiting period and putting in a proper waiting period for them. Know who is eligible for coverage under a group benefit contract. So this is really important. I get calls all the time from advisors who say to me, I have a potential client, but they really only want to add these 3 people onto a plan. Group insurance doesn't work that way. Okay. There are very strict rules and regulations. It's supposed to avoid anti-selection. Insurance companies could decline to quote if they find out that the group hasn't been set up properly. So things that you want, if this comes to your attention when you're working with a client or prospect, employers can't pick and choose who goes on a benefit program. Okay. You can class it out. You can have, executives only or something like that. But typically, everybody who's a T4 employee is required to participate in the benefit program. As well, many contracts are set up as mandatory plans. So there is no deviating unless an employee has coverage with a spouse or partner. That is the only way that they can waive or refuse to have benefits. They still have to be on for the life insurance or the pooled benefits. Pooled benefits, if you've sat through one of my webinars before, life insurance, accidental death and dismemberment, long-term disability, critical illness. If those are being added to the plan, they do have to be on, but unless they have coverage with the spouse, they become part of the benefit program. So there's something that is to be said. We have a lot of advisors who have employers fill out employee census, and some of it is missing because they think that they don't need to add them onto the plan because they're covered elsewhere. No, they still have to be on there, and they still have to be accounted for when we're sending it out to market. And advisors need to be keenly aware of that, because there are liabilities, and we're going to get to that in a minute, to the client, to the employee, to you as the agent and advisor as well. But we're going to get to that in a minute. So who qualifies? What employees qualify, or what is the eligibility requirements for employees? Permanent residents working in Canada, actively at work, meets the waiting period outlined in the contract, and meets the minimum number of hours required by the insurance company. So if you've worked with us in the past, you know that when we do one of our marketing presentations for you to present, or if we're presenting it with you, we identify what that waiting period is, and the number of hours needed, because every insurance company has different hours that they require, or that they offer as a minimum. Some employers may consider an employee to be part-time, but really they could qualify under a group benefit plan as a full-time employee. So depending on the insurance company will depend on what those minimum numbers are. But we highlight those for you in the presentations that we do. We want to protect, again, your client, but we also want to protect you as the advisor, and of course working with us as well. So number 3, beware of, and why we bolded this, is the 31-day rule. Industry-wide, Canada-wide, there is a 31-day rule in effect, which says that, and it's a very important one to understand, standard and very important rule in the industry, and that's every insurance company, insurance-wide, requires that enrollments or life events related to coverage changes, particularly increases in coverage, be reported to the insurance carrier within 31 days of the eligibility date of the life event. So what are some examples of life events that can cause coverage, or cause there to be a late applicant status, and if not paid attention to? Life events are marriage and divorce, cohabitation, and set out in a group benefits contract. There is a cohabitation guideline, and depending on when you implement a plan, and depending on the insurance company, we can there are options to choose from to set the cohabitation period for the client. A birth of a child or adoption of a child, the loss of an insurance from another plan. So if you have spousal coverage, if you have an employee who's got coverage under their spouse, they happen to lose their job and they need to come back onto this benefit program that your client or the employee happens to be working at, they have 31 days to do it. The ones that are less important, that don't really have an effect but could pose problems at time of claim, are salary changes. If you're putting in a benefit program that is tied to long-term disability, short-term disability, or that the life insurance is based on their income, salary changes should be updated on a yearly basis. It's really important. You would hate for a claim to have to be paid out, and it was from 3 years ago salary, and they don't get their full amount for long-term disability, or the employee passed away and it's 1 times annual earnings, and 3 years ago it was $60,000 and now it's $90,000. The beneficiary is going to be out that money. So we want to make sure that salary changes tied to benefits are updated on a yearly basis. A change of name. So if you've been married or even getting divorced and you've changed your name. And then, of course, change of beneficiary. So you want to make sure that those things are done on a yearly basis. As advisors, we all know that beneficiary status is really important. It's and group insurance is the same. everybody who enrolls in a benefit plan needs to name a beneficiary. And we always suggest that looking at that on a yearly basis is key. So those are life events that can affect coverage. Consequences of not doing that, and what could pose problems, or employers calling you or employees being upset, is if they haven't done this within a certain time frame and they are considered a late applicant. And there are consequences. So let's just pay attention to that for a second. Let's talk about the definition. So a late applicant is an employee who has missed the deadline for the allowable enrollment period or reporting of a life event and must submit medical evidence of insurability. So just to be clear, group benefits runs under the assumption that there are no pre-existing conditions that need to be addressed. That's the whole beauty of a group benefit program, that somebody who has a condition or somebody who has drugs that they need to take on an ongoing basis, that those get paid for through the benefit plan. However, if an employee becomes a late applicant, they must submit medical evidence. And if they submit medical evidence and it is deemed that they would not qualify, well, the consequences are as follows. That could result to be declined coverage, and at a minimum, there would be a restriction on dental coverage if the late applicant is approved, even if they're approved. And the reason that there's a dental lag is because dental is typically the one that everybody wants to use first. So we provide, again, if you're working with us and you've been through one of our renewal processes, at the back of the renewal are administrative guidelines that we make available to you, the advisor, and to your client, so that they know what to do when adding an employee, deleting an employee, or making any changes to any of those employees during the year. So it's a really valuable document, and it is provided in our renewal material moving forward. So protect yourself. So when you have a prospect and when you're working on a new client, there are things that you're going to want to be familiar with. You're going to want to be able to navigate through, and that's just solely to protect yourself. So things that you need to know. Let's go through them. The minimum number of employees that need to be on a plan, the minimum length of time that that company needs to be in business, what goes on in an employee data sheet. We're going to talk about that in a second. The rules around employee coverage, participation rules, general liability for all stakeholders, and employees who refuse benefits. This has come up in the last, well, for me personally, with some of the groups that I've been working on in the last few months. These are questions that are coming to me that I'm working with advisors on, so they understand the dynamics of best practices and what can go on when you're trying to put a benefit plan in place. So the minimum number of employees that need to be on a plan, in getting a quote, not within your within the employees population, but to get a benefit quote, the number of employees is 2. We work with several carriers. We could put in a benefit plan that has 2 people on a plan. The minimum length of time that a company needs to be in business is no less than 6 months, preferably a year. Okay. Insurance companies find that very risky. Some won't take on a group if they haven't been in business for at least 18 months. But we can work around a year. 6 months depending on the case, but typically if they've been around for a year, then that is going to be okay. Who goes on an employee data sheet? So on the right hand side here, employee information. This is the information that every insurance company needs in order to get a best practices quote, in order to make sure that they are quoting properly. Names, genders, dates of birth, occupations, salaries, dates of hire, and coverage status. And coverage status means, are you single? Are you couple? Are you family? or do you have coverage with a spouse? And if they do have coverage with a spouse, they could go on as a waiver, but they need to be on for the pooled benefits, as we discussed. Pooled benefits again are life insurance, accidental death and dismemberment, sometimes LTD if we've added it to a plan, and critical illness if we've added it to a plan. Those are non-negotiable. Every employee needs to be on for that, because if they are not, and let's say they were covered with a spouse and that spouse loses coverage, they can automatically come back within 31 days to be added back onto the plan as a full employee with family status. So all of this is really important that we get, because this is what the underwriters at the insurance companies look at to assess the risk, to assess the organization, and to provide a quote, because there are demographics that go into it. So that's the information that we would require, and we have employee data sheets that you can use and that we can supply to you if you're working with our team. Rules around employee coverage, again, that goes along with the coverage status. So single, family, couple, if we're doing couple rates, and waivers, who's a waiver, when can you waive coverage. Participation rules. Now, insurance companies have different ways that they look at this. Most insurance companies provide quotes based on a mandatory plan, which means everybody goes on. But sometimes in an organization, there are situations where employees flat out refuse to go on a benefit plan. I'm not sure what the logistics are with that. I'm not sure what the reasoning behind that is, but we have been in situations where employers or employees flat out refuse to be on a benefit plan. In that particular case, you would need to look at the insurance company's quote to find out what the participation rules are. Typically, they're about 75%. So that if you've got a group of 10 people, there can't be more than 7.5 employees, 8 employees, let's say, who can refuse benefits. Otherwise, the plan can't be put in place. They have to have a really good reason for why they don't want to be on the benefit plan. And there would be, for your protection, for your employer's protection, for your protection, for my protection, for the insurance company's protection, that they sign a refusal of benefits form that goes into their file showing that they've refused benefits. And if they have, they can never come on the benefit plan again unless you've moved carriers and the opportunity for discussion arises. So employees really have to understand what they're giving up when they refuse benefits, and what the repercussions are if they refuse benefits. And that's really important. I'm happy to have a one-on-one discussion with anybody who wants to know more about that. When you're putting in a benefit plan, who gets covered, or what do you need to know? Full-time employees, absolutely. Part-time employees that work around 20 hours a week. We do have an insurance carrier that goes down to as low as 15 hours, but 20 to 24 hours is minimum. So if somebody works part-time and they do work at least 20 to 24 hours, they do get put on the benefit plan. Your employer, though, if they don't want to offer it, or they want to set a limit of the number of hours, that can be done. We do that often. So there's no worry there. As well, seasonal employees and contract employees, that used to be absolute no-goes. However, we have ways of carving out or creating classes that meet certain criteria that allow seasonal employees or contract employees on a plan, but they have to be full classes and everybody has to join. So again, we're happy to set up a time to discuss if you've got a prospect that you're currently working with, or somebody who's interested in benefits and they fall in that contract employee arena or seasonal employee arena. There is a conversation to be had, and I suggest you reach out to us to find out. As well, class structures are allowed. So if you've got, a company that's got executives, office staff, and factory workers, of course, we can accommodate that as well. So those are some of the things that you need to know about to protect yourself. So when you're talking to an organization, when you're talking to an employer, that you know exactly what the rules are and what information you're going to need in order to get a successful quote. Now, some of the things that affect perhaps your credibility. You want to always be working within best practices, that your client can rely on you and your team or our team to get the benefit plan up and running in place that will meet the objectives and establish your credibility. So your credibility is key. So some of what I want to talk about here is ensuring that you're asking the right questions and understanding the client need. That's going to make the journey successful. If you've missed something during your discovery or your general conversation, that could set the client up for failure. So we want to make sure that you consider some criteria when you're talking to your prospect. One of them is what's the client objective? Right? Why are they putting in the benefit plan? Why do they want to put this in? Is it just to check a box? Is it because their employees have a specific need? Is it because they need to be competitive for retention and attraction? That's going to be important. You're going to need to know that. You also want to know, how is their business set up? Do they hire temporary foreign workers? Are all of their employees seasonal? Are there rules around that? What type of business are they in? Are they a nonprofit? There are rules around nonprofit organizations that you might want to take into consideration or know about when you're talking to the client. Who are their employees? What's the makeup of them? Are they all family? Are they millennials? Is this, what's their savviness with benefits? Are they asking certain questions? Do they want a survey so that we can check those boxes? You might want to offer that type of analysis to boost your credibility as an advisor. Gathering proper information from the client and the why is needed. So if you've worked with us before, if you're in the group benefits space, let's say you have a prospect who comes to you and says to you, well, I currently have a benefit program. They're currently with Canada Life, for instance. I'd like to market this out. I don't think that the rates are competitive. I've been with them for a couple of years. Is there something that you can do for me? Here's what I want done. There are pieces of information that you are going to need, and without it, you're not going to be able to get a quote. So being firm and asking for this information is going to lead you to a successful program. Number one, the employee data. We want to make sure it matches their current billing statement. Number two, their current booklet. Are we matching apples for apples, or are we doing some outside of the box thinking? We do need to know if the rates that they were being charged match the booklet that they have. So the booklet. The last 2 or 3 years of rates are going to be vital. We're going to need to know, the insurance companies are going to need to know, why has there been an increase? Why has there been a decrease? The experience, the premium versus claims, the client experience. Is there something we need to know? Was there large claim drugs that you had no idea about, and that could prohibit you from getting competitive quotes? Are there people on long-term disability? Why have their paramedical practitioners doubled in the last 2 or 3 years? That's all important information. So in order to do a proper quote, you're gonna need to get that. And the reason why you need it is that there's a story to be told. And if any of you have sat through any of my presentations, you know that everything I do is based off a Netflix series. I watch everything on television. So the last thing you want to do is come in at season 3, episode 2 of your Netflix series. You don't know what's going on. You don't know who the cast of characters are. You don't know, if there was a couple of people who had cancer claims and that skewed the plan. We want to know what's going on so that we can move into the next season of our series. So that's one of the reasons and why your credibility is boosted when you ask for that. Understanding the marketplace. So knowing that benefits are not just traditional benefits and that there's more than Manulife, Sun Life, Canada Life, Empire Life in the market. We at IDC have our range is vast, and the offering that we give to our advisors and our clients is vast. So if you've sat in other presentations, we do flex plans down to 3 people. We do modified flex plans where employees have choice. We do hybrid plans. We do just healthcare spending accounts. We do top-ups. There's a range of products and services to deliver. So it's one thing to put in a benefit plan for your client. It's another to put in a benefit plan that actually works and meets the objective. And once you put in a plan that meets that objective, your credibility is boosted. So I'm going to stop for just a second to say this is when why we do these webinars, so that you can have our contact information and you can reach out to us for those clients where it might be some outside of the box thinking that you need, or change management that might need to go on with your client that we can assist you with. I'm just going to go back for 1 second. I see that there is something in the chat. We do, so the question is, do plans have access to investments for retirement planning in addition to their group benefit plans? We are very heavy in the group retirement space, group saving space. So if you wanted to complement the group benefit program with a retirement or savings plan, we do have solutions that can help, and we suggest that you reach out and we can review those with you. Sometimes they're single sign-on, sometimes it's a third-party company that we use, depending on the need of the organization. And some of the questions that you might want to ask your client right off the bat is, do they want to have a voluntary plan? Do they want to make it mandatory? Are they wanting to match contributions? Do they currently have a group savings plan? Are they looking at lower, let's say, lower IMFs as a means of attracting things like that? Those are questions that you want to ask, as well as how much assets do they currently have if they have a plan. So those are things that you're going to want to ask in a prospect meeting as well. That also boosts the credibility there. And let me, the lower IMFs are your fees associated with a group retirement plan. Again, we can have a one-on-one conversation on that. So we're going to move here into our next slide. So provide a great client experience. So where I want to go with this is that, let's say, for instance, you've done a prospect meeting, you have all the information, you've got your employee data, you've put it all together, you've sent it out to market, they've decided, your client's very happy with what you've come back with, and now they want to move forward with a particular insurance carrier. It doesn't stop there. And there are things that an advisor needs to know before fully implementing a plan, and where things can go off the rails. It's not the right words I want to use, but I'm gonna do it that way. So things that you're gonna want to know, and I'm gonna read them out because I do think that they're really important. So the first one is, if the employee data has changed from the time of the quote to the time of the sale, it might need to be requoted due to participation rules. So for instance, you were working on a group, it had 15 people at the time that it was sent out to market. You presented it, you're ready to move ahead, you've filled out all the enrollment forms with your client, the client submits them, or we submit them, and it's noted that instead of 15 people, there's only 11. Now, that happens. Things happen in an organization, but the insurance companies are going to want to know why. And because that falls below that 75% threshold, it may need to be requoted based on the lower amount of employees on the plan and will hold up the implementation of that group. So that's something that you need to take into consideration. Now, it could very well be that there was a mass exit of employees, or they terminated or laid off employees during this process. That happens, and that's okay. But we're going to need to know. What does tend to happen from time to time is that you've quoted it out as 15, but it turns out that only 11 want the benefit program. That's not going to be acceptable. Again, going back to a previous slide where we talked about these plans are mandatory and that there are rules around who goes on a benefit plan. Employers can't pick and choose who goes on a benefit plan. Employees don't really get to choose whether or not they go on a benefit plan or not. And there are rules around it. So knowing that there are participation rules, and when you get the enrollments back, if they don't match the number of people that the quote originally went out to, we may need to have a conversation. If the quote is more than 60 days old, it might have to be requoted due to the stale information. So as advisors, you know that ages of life insurance clients change, every quarter or however that works. So does group insurance information. So if the quote is more than 60 days, typically insurance companies will hold rates, but we need to ask permission. And so if the quote is 4 or 5 months old and the client is ready to move forward, it might need to be requoted, at which point implementation could take a little bit longer. Just so you know, it generally takes 3 to 5 weeks to implement a plan from the word go to its full implementation. You need to set expectations ahead of time to your client to manage due dates and communicate with your client effectively. So if you've submitted everything, but the insurance companies come back and asked a slew of questions, those questions need to be answered in a timely fashion, because every day that goes by that those questions aren't answered is another day on hold of the implementation of the group. If you're missing documents, if somebody was on vacation or you were missing something, a plan does not get implemented with a carrier until all pieces of information are provided. Okay. If we've had to go back and forth with a certain matter on the plan, it could hold up. So effectively setting expectations and working with the client and communicating with the client effectively is going to be key. Of course, that's going to boost your credibility and it's going to lead to best practices and a great client experience. The last piece on this slide, filling out forms and getting proper employee information is part and parcel of setting up a plan. Ensure your client is comfortable providing the required information ahead of time, as this can lead to delays in the setup and potential bumps in the first months of the plan. So what do I mean by that? Many times when we've implemented a plan with an advisor, the first month always, I don't know one that has ever really gone smoothly. And the reason being is that some people fill out their enrollment forms and they miss information or they put in incorrect information innocently. So for instance, you have an employee that's working at a company and he has 3 kids, and one of the kids, their birthday is October 11th, but he put in November 10th. That is going to cause a problem when he goes and fills a prescription or tries to use a plan for that particular child. So making sure that the employees understand how to fill out the form, the dates and months and years of how to fill out the form, that is going to alleviate some of those bumps and bruises along the way. For my fellow advisors who are on this call, maybe in BC, there's Fair Pharmacare. And so if you are a resident, we hope that everybody has registered for their Fair Pharmacare number. Getting those numbers ahead of time or including them on the enrollment form does help navigate. If you have an employee who might be on a large claim drug and needs to needs to facilitate the drug plan right away, and it's a costly endeavor. So that's something that should be noted ahead of time to ensure that we have all of that information. That will help the client experience, and that will alleviate some bumps and bruises that could happen at the beginning. Could be that an employee was single or is put down single on their form, but it turned out that they actually have family members on their plan and they didn't include them. We have to go through the process of making sure that that gets updated in a timely fashion. So understanding how to fill out the forms is equally as important as well, because that alleviates bumps and bruises along the way and makes for a client experience. The setup of a benefit plan and implementation of a great customer experience is the objective, obviously, but getting there can be complex. So here's this one we already did. Sorry, I think the slide may have been just duplicated. Apologies for that. So that is the presentation. We hope that these tips and tricks will help navigate some of your prospecting questions. When you go through and meet with a client, why it's important to, get their renewal reports if they currently have coverage, to know how their group has trended. When you're working with our team, we're going to ask you some of these questions, and some of you might roll your eyes or question, why is she needing all of this information? Why do they need, rates for 2 years or experience for 2 years? We need it because it tells a story. And insurance companies need all of the information in order to properly assess the risk. So in the next 2 months, when I refresh the 4-part series, you're going to get a deep dive into know your client, doing a discovery, and what the insurance carrier needs in order to facilitate a quote. We're going to walk you through the RTQ requirements, working on a plan design, putting in a proper plan design, things like that. We're going to move to understanding the marketing proposal that we put together, so that you can adequately go in and showcase based off of your client perspective or what the client need, how to do that. We're going to talk to you about the renewal process, what we do during the renewal process, and of course the implementation and the communications of ongoing for your client. So that again, you're protecting your client, you're protecting yourself, you're protecting your credibility, and you're making a great client experience. Okay, I'm just going to quickly check the chat box. These slides are going to be available on the IDC WIN Institute after the presentation, probably in the next couple of days. You'll be able to find it there along with all of the videos. And I'm going to put, there's a note here, I'm going to put my email address in the chat. So if anybody does want to set up any time with me or with Candy, we're going to be able to schedule some time with you and go through all of this. But I do hope that this was helpful. It's becoming, we're working with a lot of advisors. Some of our advisors have a ton of experience, others don't. And we just want to make sure that we're equipping you with the right tools, the right resources, the right questions to ask, and so that we can set expectations ahead of time. And then our contact information, if you want to snapshot that or take a slide, a picture of that, you can do that as well. Okay. And if there aren't any other questions, then I'm going to let you take back 15 minutes of your day, and we'll end that. And I look forward to seeing some of you possibly at my next session starting in November. So have a great day, everyone, and thanks so much for joining me today.